The 4-step method to high-performance trading and the 7-step daily routine for high-performance traders are both free downloads. The 4-step method for high-performance trading is about developing the mindset and the routines to increase your confidence and your ability to execute your trading edge in a live trading environment. Constant progress. 7-step daily routine for high-performance traders is an audio program download designed to help traders bulletproof their day-to-day habits, discipline, and develop a winning mindset. Again, the link is in the description box below. They're free downloads. Let's get started. Good day, traders. Stacey Burke from Stacey Burke Trading. A very short video highlighting the opportunities that presented this week on day 1, day 2, day 3, front side of the week, and on reset Wednesday, day 1, day 2, day 3, on the back side of the week, pointing out just on the major currency pairs, simple opportunities that presented right out of the playbook throughout the week. Monday, day 1 is our opening range. When the week starts, Monday morning, we start from Friday's closing price. There may be a gap on Mondays, but Friday's closing price is the reference point, as is Friday's high and low of day, assuming that Friday was not a holiday. From this point, we expand the range and establish new high and low boundaries heading into our new week. Monday is the opening range of the new week. On Monday, the day 1 Japanese yen broke out of the high of day, of Friday's high of day. We had a signal that coming to the screen that the market has broken out. We talked about this in our recent video on building your watch list, but we have a market that is broken out when we come to the screen for the US session. This can be an indication of a 3-session setup, and we also have our basic model for trade entry criteria if this opportunity presents for a reversal opportunity in our US window. There was no major red news on the calendar. We have a market that's pumped up from Friday's closing price and expanded the range, broken out, and then given traders a fantastic reversal opportunity at the end of our 3-hour window. And as some traders commented, the half Batman pattern for an easy reversal trade back into higher level longs from our London session. Japanese yen Monday, day 1, opening range. Now, Tuesday on the front side, day 2 typically expands the range. So coming back to a simple understanding, when we start at Friday's closing price on Monday, we're expanding the range. Day 2 typically expands that range more. We can call that a trend trade. There can be reversal opportunities that will expand the range on the opposite side. But we're looking for opportunities either for trend trades or reversal trades. When you get a range expansion, the market is sending you a very loud, clear signal that the market is getting ready to move in the direction of that expansion. Paul Tudor Jones. Monday, the euro closed in breakout. And we'll just back this chart up a bit. Friday was an inside day. And we made higher highs on Monday. And we closed in breakout. Now, I'll remind traders there are 2 types of templates on the day that I'm hunting if we have an ideal, well-engineered chart. And that is a pump and dump, as we just saw in the Japanese yen, or a dump and pump. Market that's made higher highs, potentially dumping down and coiling for an explosive reversal opportunity. Now, we had major red news at 8:30 New York time, and we see that large explosive candle. And then the consolidation as we head into our second hour and in towards the New York Open. We have our basic model for trade entry criteria, page 29 in the playbook. For a 10 pip stop loss, max stop loss on a market that is potentially now going on a range expansion after major red news into our second hour. Now, one of the options on a range expansion is to project the high-low, the breakout of our high-low opening range as a potential profit target. And in a strong moving market, we can look for a possible opportunity of a 200% expansion. In this particular case, we can use the low of day level, and the market meets that criteria, closing in breakout. So we have major red news. We're on day 2. We had a market that closed in breakout, making higher highs on Monday, day 1. Friday was an inside day. Potential signal now of a market that could be going on a trend trade. Higher highs again on day 2. Range expansion. The dump and pump template, the coil sideways after major red news, our basic model for trade entry criteria in the coil, and an explosive 200% expansion of the range on Tuesday, day 2, the front side of the week. The Canadian dollar closed in breakout on Tuesday, day 2, as a first red day. Monday was an inside day, but also the week itself closed in breakout. The Canadian dollar closed in breakout at the end of the week. Monday was an inside day, so again, an indication of a possible false break or trend trade opportunity. Now, this market closed in breakout, clearly not a false break. We have a first red day signal heading into Wednesday. We had CPI on Wednesday. First red day. Page 58 in the playbook is a high of day, high of session selling opportunity if indeed it presents. The market closed in breakout. Again, we have worked back up into the low of day breakout level and established a high of day. Broken down a range expansion, a range extension on the downside prior to CPI to establish our high-low boundaries. CPI wicks and pumps back up into our high of day breakout level from Tuesday's close. And again, the New York session pumps up one more time, second hour, and into our New York open, we get our engulfment on the third push to the high and breaking down inside of our universal entry criteria. Obviously, traders had the opportunity to enter in on the engulfment for the short trade to the low of the week, high of day to low of week. Now, this is day 3, day 1, day 2, day 3, and this market could have the potential now to just be a nail and bail trade opportunity, zero stress, zero emotion, and also gave traders who were looking for this later after our 12 candle window, our 3-hour window, for the reversal trade back inside of the range. A market that closed in breakout, gave us our first red day trade after CPI release, tight stop, a 1-bar stop, high of day, taking profits, and just for traders to see, taking the low of day, projecting that to the high of day, and a 100% range expansion of that rectangle for a potential profit target where we can see the working the low, the consolidation. You want to be locking in that money for traders who were looking for that reversal opportunity. That came later back inside of our universal entry criteria again in the middle gap 3-hour window into closing price. A first red day shorting opportunity on Wednesday, day 3, after major red news in a market that had closed in breakout on the Canadian dollar. Now, the British pound broke out on day 2 and closed in breakout. Day 2 typically expands the range. It closed in breakout. Wednesday was an inside day. Again, a signal day. Heading into Thursday, we had major red news at 8:30 on Thursday, but we had an inside day. Inside day, we can have either, page 69 in the playbook, either trend trade opportunity, which we saw in the Canadian dollar, or a false break reversal opportunity. We have a market that's broken out on Tuesday, day 2, giving us an inside day on Wednesday, day 3, the reset day. We have major red news at 8:30. The market breaks the low of day level. It breaks out after major red news, and at the end of the hour, reverses at the beginning of the second hour and engulfs. We break out, we engulf the low of day level, and move higher and consolidate right into the New York Open underneath of closing price. Always think of your entry point as last night's close. Paul Tudor Jones. We have a nice engulfment, a coil sideways at our New York Open for the parabolic reversal back to the high of the day. Again, understanding how the inside day traders, inside bar traders could be trapped in a market that has already broken out in the long direction. Breakout, pullback, continuation. Our universal entry criteria gets traders in 5 minutes later, but you'll again understand if you recognize the opportunity, the coil already was in place for the explosive reversal back to the high of the day. British pound on Thursday, day 2, the backside of the week. New Zealand dollar, we had an RBZ rate announcement Tuesday evening, Wednesday morning New Zealand time, Tuesday evening North American time. And a great template to demonstrate the escalator ride up into the major red news release and the dump. Now, typically on the front side of the week, day 2 expands the range, and we can look for reversal opportunities on day 2 on the backside. And then this is a great example of where day 2 on the backside expands the range. It closes in breakout. So we've taken out the low of the week. We've closed in breakout outside of our opening range, heading into Friday, day 3 on the backside. Now, day 3 on the backside, Friday, we're looking for either parabolic trend trades or parabolic reversal trade opportunities to close out the week, the closing range of the week. Market closed in breakout. We're heading into our Asian session, New Zealand crosspair. I talk about this all the time, having a basket that reflects the session that you're trading potentially. And we have a beautiful coil at closing price. Again, Paul Tudor Jones, think of your entry point as last night's close for the parabolic reversal opportunity on Free Cash Friday in a market that closed in breakout on Thursday, day 2, the backside of the week, for an easy, zero stress, low risk trading reversal opportunity on Free Cash Friday. Day 1, day 2, day 3, reset. Day 1, day 2, day 3 into the closing range of the week. Now, the point of today's video is to demonstrate exactly what this title says. Simple day trading. Stepping back and identifying what type of weekly template am I in? Do I have any signals or opportunities that the market is sending me based on yesterday's behavior of price? Hindsight pays. What type of weekly template am I in? Day 1, opening range. Day 2 typically expands the range on the front side of the week. Wednesday, day 3 is the midpoint range of the week and a possible signal day. Day 2 on the backside, we can look for reversals, or as we just saw on the New Zealand dollar, a range expansion and a close and breakout for a reversal, a parabolic reversal on Friday, day 3, Free Cash Friday, the closing range of the week. Keep it simple, traders. Everything you need. This is just the major currency pairs. No smoke and mirrors, nothing complicated. A very small basket. 6, 7 instruments just on major currency pairs gave traders some fantastic opportunities in a week filled with a couple of major red news movers. So step back, keep it simple. Sit on your hands, hunt out the best opportunities, and execute, lock in the money, and walk away. Don't do anything to damage or self-sabotage those simple, good results that you can reproduce week in and week out. Have a great day, traders. Hopefully this video helps, and may the markets go with you.